Hey everyone, it's Rob from Vanguard Realty Alliance. Today I'm going to be interviewing Mike Tavani about the 3% conventional loan and the power of this loan. I definitely think you should check this out, whether you want to buy a multifamily property house hack or you're just looking to buy a house for you to live in. This loan is really powerful in a lot of ways, and I think this is definitely worth listening to if you're going to do that. All right, without further ado, here we go. Hello, everybody. Thanks for joining us. I'm here with Mike Tavani from Guaranteed Rate. He is a all-star of a mortgage broker that I don't know how much you're going to do this year, Mike.
Probably going to be a slightly over 100 million this year.
Woo!
The goal.
Yeah, that's awesome, man. That's fantastic numbers, and I've worked with you a number of times helping people buy homes, and I can say you do an awesome job. So, and I've known you, I think probably since we were like 14. So that's like what, 20, I don't know, 22, 21 years, something like that.
22 years sounds about right. Absolutely.
Oh my God. We're old people now, man.
Now our kids are young.
Yeah, I know. Oh man. All right. Well, the purpose of our interview today is I was working with a client who was looking to buy a duplex, and we just did a 3% conventional loan for another client of mine. And everybody's like, you can do a 3% conventional loan. And then the other thing that really caught my attention is that I have a guy looking to buy a duplex, but my seller was like, I'm only going to accept conventional financing because for people that don't know, basically you can go FHA or you can go conventional. But a lot of sellers prefer people to go conventional because FHA sometimes requires repairs to be done. So in this competitive market, you got to do everything you can to get it. So anyway, basically the seller said FHA, no deal. You got to go conventional. And my guy didn't have a lot to put down. So I started talking to you about that. And what you told me really surprised me. Um, so yeah, so tell me a little bit about this 3% conventional program.
Got it. So there is essentially one individual outlet outside of the FHA loan, as you already mentioned, that allows you to stay within the conventional loan program where you're putting as little as 3% down. And in addition to only putting 3% down, you also get a reduced MI rate as well. So
Wow.
it's a program that's only available through Freddie Mac. And the biggest caveat there is that it comes with an income limitation. So the max income, gross income prior to taxes on that program is, for the most part in our area, $77,280 per year.
$77,280.
Correct. Cap for the year. So if you are
Still pretty high.
making less than that, you automatically are approved for this particular program. Another unique caveat is that the income that is being produced from the property you are purchasing, so if you're buying a duplex, the other unit's rental income does factor in to that 77,280 limit. So the goal would be to, get approved for the loan and get approved for the home without having to use the gross rental income of that other unit or the other two units if you're looking to buy a triplex.
So that income only really comes into play if you need that income to get approved for the loan.
Correct. So then it would, and that's a really good point, Rob. So the 77,280 is capped at your qualifying income. So in our mortgage world, there's a difference of total income and qualifying income. So let's break it down on a quick example that you make $60,000 a year and you have a $20,000 commission structure. You make $80,000 a year. But if we can approve you for the loan based on just your base income of $60,000, we can ignore the $20,000 commission income and we can approve you for that particular loan.
I'm glad I have you on my side because I don't know like how I would ever figure this crap out.
Yeah, there's, as I mentioned to a lot of folks, the mortgage industry is multidimensional. There are layers 1, 2, 3, 4, and 5. It's an onion. It's Shrek. It's Shrek.
Yeah.
And the further you kind of go down, the more you become educated. But there are a lot of one-off caveats that could essentially be the difference of getting your borrower approved for the loan or forcing them in that FHA loan, which is leading to your point, an offer that essentially never gets accepted.
Yeah, I mean, with the house that you did for my friend just now that we just bought in Westchester, PA.
Mhm.
I mean, I was amazed how low his payment was with how little he was putting down. I mean, I think everybody needs to know about this loan. Like, if you don't know about this loan, you're really missing out. And I think, it's important to understand that there are income restrictions, but I think it also makes a lot of sense for people to reach out to you first, and then you tell them no instead of them telling themselves no, and shutting it down. Oh, I make 80 grand. And you go, hey, wait a minute, you know,
There's some caveats.
let's take a look at that. Because again, this is not only an awesome home for, buying a regular house, but the thing that really interests me, because you were saying, like, if someone goes to buy a duplex with conventional financing, the down payment goes up quite a bit, right? Normally.
Sure. Yep. And in a standard conventional loan, the minimum is 15% down, which is why the FHA option is so popular. This program is newer. I'd say probably, well, don't hold me to it, but I'd say around 2 to 3 years old. And we use it often. I mean, it is definitely, the income limitation certainly takes, a chunk of people out, but we probably as a team close 10 to 15 of them per year. And, one of the other strengths of the program is that you're not being penalized for it in any way, shape, or form. You're still getting a rate, assuming good credit, of below 3% right now.
Wow.
And you're below 3%. You have a reduced MI rate. You're, to your point, officially house hacking. You're offsetting a large portion of your personal housing debt with the income of the other unit or units. And, it really is a wonderful opportunity for some of these folks who are trying to, get into real estate, minimize their true housing debt and really take advantage of the low rate opportunity.
So I was asking you before about seller's assist with this loan. You say it is eligible for seller's assist with the 3% down?
Standard conventional loan, obviously you're putting less than, you have the option to still utilize the program and put 10% down. So just like standard conventional loans, if you're putting less than 10% down, you are limited to a 3% of the sales price seller assist. If you are putting 10% or more down on the property, you are limited to either 6% of the sales price or not to exceed closing costs. So what that means is that if your closing costs are less than 6% of the sales price, then you will be capped and your seller assist will match that amount of the total closing costs. The reason why that exists, and we get that question a lot, is that if you structure the loan where the seller is paying for your entire set of closing costs, and then the seller succeeds that, they are then contributing to part of your down payment. And that is what
right. Yeah, like sometimes I run into that if I do like a buyer's rebate for a client out of my commission, things like that. Yeah, I mean, so like in my brain, I'm just thinking about, like, again, people are house hacking. They're looking for ways that they can live for free for like little money down. So, I mean, if you were doing a 3% down with a 3% assist, you could effectively basically be putting down 0%.
You're only paying your closing costs of the loan. Exactly right. And that happens.
Wow.
It happens often.
These, people really need to know about this stuff, because it's like, they're like, I need so much money to start buying out. I'm like, listen.
Also yesterday, my marketing assistant just released this comparison of what your monthly rent is compared to the home you can buy. And I think on the higher side, just off memory, I think it was like $2,000 in rent is equal to anywhere from like a $300,000 to a $3,200 housing payment. And, rents are, being pushed higher. We're seeing that, all across the board. And, having the ability to put 3% down with a 3% seller assist, take advantage of rates below 3%, it really does push folks into buying. And we still hear it every day that it's a true seller's market. You hear that every day because of how fierce and competitive it is out there.
Yeah.
But at the same time, the buyers have access to essentially free money, Free
I
money.
I've been hearing some crazy stuff like
That's a
2.2.
buyer's advantage as well, as far as I'm concerned.
Yeah, well, I was just looking at some charts on affordability right now, and even though the prices are up, affordability is actually better than it has been in years past, just because the interest rates are so low.
It really is.
So, you're looking at like amazingly low payments relative to what you were experiencing, with the 4% interest rates, and you're, talking, in the below threes now. So
And it wasn't even that long ago, Rob. I mean, in 2018, in the fall of 2018, the average loan was being locked between 4.5 and 4.75%. That was 2 years ago. And now we're a full 2% below that. We've essentially refinanced all of those folks into, longer term, lower rate debts. Those break evens are incredibly quick. And it's just a great opportunity. It won't be around forever, and but a lot of people are just it's we're as busy as we are because of the opportunity that's being presented to a lot of folks. And with some of these
right.
stronger programs around the low rate interest rate environment, it may make sense to pay a little bit more for a house, knowing that your interest rate and the rate you're borrowing that money at is at a severe discount.
Well, I think especially with, if you're going to hold the house for a long time, and you're locking in that low payment, and then, the Fed is printing money like crazy, so inflation may happen. So, it seems to be happening, in my opinion, just from, when I go to the
I think
grocery
it has
store.
to happen by default a little bit there.
Yeah, but housing's a great hedge against that. And yeah, well, I'm just like so intrigued about this program, and I think that I'm glad we're taking the time to educate people about this, because I think when you sort of dig into this and you start talking to real experts about, hey, how much do I really need to put down? There's some possible scenarios where, you could be buying a duplex with effectively 0% down, just paying closing costs using a conventional loan. And so that doesn't mean it has to be in perfect condition. That's the one thing they don't tell you, right? Oh, well, you just go FHA and the guy will just sell you the duplex. And it's like, well, he might not want to go through an FHA appraisal and have to do the repairs and all that kind of stuff. Or he may just not want to jump through the hoops of the FHA financing. And there's also some pretty high mortgage insurance sometimes with that. So I was just really impressed with this program. So I'm glad we're taking the time here to get the word out about it. Yeah, man. Well, I think it's like the ultimate house hack loan. You know what I mean?
It's just an incredible opportunity for every single person out there. Again, factoring in that income limit, which there's a lot of folks that are well within that limit, have a little bit of funds saved and can truly pull it off and put themselves in a better position going forward.
That's one thing I wanted to ask you. So the income limit, you said in our area, which you're located in Philadelphia, those income limits change based on where you live?
They do, and it is pretty much the greater Philadelphia area. So I have it set up in Westchester right now. It is 77,280, but essentially what we're doing on our end is there's a complete map specific to the program, and we will always type in the exact address that you guys are looking to make an offer on, and we will confirm that. It's a kind of a combination of the 100% median income versus the 8% median income, but the program runs this limit, and it's all factored into the automated approvals that are run, through the mortgage underwriting system. Okay. And again, one of the biggest parts is just the qualifying income. We don't need all of your income, but if you have one aspect of your income that is within the limitation and it's enough income to be approved for the loan, essentially good to go. And we've gotten creative with it on our end to make it work. Everything within guideline, and just removing some of the extra income that one may receive. Good to go. Close them all day.
I'll tell you what, man. There's a reason you close 100 million. You figure out the tricks.
We're getting pretty close. The team is just fantastic. A lot of phone calls, a lot of nights, a lot of weekends, but we just want to help as many people as possible, and we are given the opportunity to do that.
Yeah, I mean, I know the refinances have you guys busy. It's like, anybody out there watching, if your rate's above 4%, just refi your loan most likely.
Likely.
Well, Mike, I really appreciate your time. And I just wanted to ask if people want to get in touch with you and take advantage of this program or ask you questions about this program, what's the best way for them to reach you?
Email is definitely the best out of the gate. We're trying to manage those refinance requests coming in. So I'm sending everyone directly to the email. And then we just set up a quick call. 484-802-4583 is my cell. I am on it all day, every day. Thanks for having me, Rob.
Oh, yeah. Well, I appreciate you coming on the Rob Lawrence Real Estate Show. So anyway, thank you guys. Thank you so much, Mike. If anybody wants to get in touch with me, it's rob@rdlre.com, or you can reach me at 484-354-9222. I serve retail clients and also investor clients in the Philly suburbs and northern Delaware. And I can also get you connected with a realtor anywhere in the country that you want to talk to help you get a house hack done and utilize this loan program. So you just got to know the right people, talk to the right people. I'm happy to connect you with the right people. All right. Thanks, everybody.
Have a good one, Rob. Enjoy your day.
All right. See you, Mike.